Hey guys, what's going on? Welcome back to another episode of the Landlord Society podcast. I'm Charlie, you're here with HD, and we are here to help people replace their income through the Landlord Academy with the Australian property market. Today we're going to be covering some of the common traps that property buyers fall into when buying a house or a property in Australia. There's a lot of them. If you get it wrong, it can set you up for failure. If you get it right, it can change your life. So we're going to be covering those four major traps that most Australians fall into.
That's right. And the first one I think we need to talk about is where people buy. What areas? Areas to buy.
Yeah.
So I think there's a lot of exciting areas at the moment. A lot of exciting areas because, the last year has been the numbers have been crazy. And there's a lot of areas that's gone up a lot. That's exciting a lot of property buyers at the moment, right? And it is pretty exciting time to be alive, to be honest, in property investment space.
Yeah, if you got into properties this time last year, you'd be pretty happy.
Depending on what you've bought, of course, right? But even the bad stuff that you could have bought still have done okay. I mean, it hasn't outperformed against the better stuff that you could have bought, but across the board, it's been a good time. It's been a really good time. And it's also interesting to note that interest rates have been rising, and yet property prices still
being right. Yeah, still high up. It's still going up.
Exactly right. And so the thing that I think people need to keep an eye out on is, are they when they look at a particular area, they'll notice that it's all gone up. I can't really afford it, but I know it's going to go up. Or then that suburb, that location is already no good for you. But the whole point of this is to acquire a property and to ride that growth.
Yeah, not to ride a suburb that has already increased 20-30%.
Exactly right. And it's not like you can buy, it's like a stock or a crypto where you can buy fractional amounts of something. You got to buy the one entire thing, right? So
it doesn't mean the growth is done.
Yeah.
Okay, there's some supply and demand metrics that might cause those areas to go up even further. But
exactly right.
Just because a suburb has increased in value by 30% in the last 12 months, that doesn't mean it's a good idea. That doesn't mean anything. It doesn't mean that it's worth jumping into for that reason.
Mm-mm. And more importantly, if that prices you out, why are you still looking there?
Yeah, exactly. Yes. Yeah.
Well, are you praying that it comes down? Because the thing is, those kind of people, they'll go, I really hope it comes down again. And then it comes down, and then the psychology of it coming down makes you go, oh, what if it comes down? Yeah, you don't want to go in. Exactly, yeah. So the area is a big thing, and it can actually cause a very long period of indecision because of the area that you're looking at. Very long period. And that's basically what's going to time and price you out of the market.
Yeah,
which is absolutely terrible. So the area that you're looking at has to be within your budget, and we'll circle around the point 4, which is about the types of property we'll be looking at. But the types of property has to match within the area to be able to ensure that locked-in capital value and the growth of it as well. So people, I think a lot of people make the mistake of just listening to all the hot suburbs that sort of worked that don't really match their value, their budget. It could be that those suburbs are more expensive or cheaper than their budget, even, right? But they will look at that and go, oh, and it causes them a period of massive indecision. I think that is the biggest mistake that comes from looking at the wrong areas. In terms of growth, I don't think there's any crystal ball that anyone holds. I wouldn't be the type of I guess sort of thought leader in this space saying that, hey, I know exactly how much those areas are going to grow. We can see the supply and demand.
We have a rough idea.
Yeah, we have a rough idea, but nobody will be able to say, on the 3rd of June in 2025, suburb A is going to be 32.5% growth on median price. That's psychic. That doesn't exist. Yeah, we don't have a real conversation.
Be skeptical of people that do say that.
Exactly right, absolutely. But what we can see is that there's a strong level of growth that's anticipated for this particular area. And that's another good way to do your area research. And you know what? Again, I come back to the budget and the realistic city, if that's the word, of you actually acquiring property within the area, because you could be a gun researcher. You could be a gun, analyst of supply and demand, and you have all that data with you. But if you ain't got the money, you're just watching pie in the air grow larger and larger.
I mean, anything to as an individual.
Exactly right. And we're here to actually make investments to actually make money on the property, right? So the right area research will come from predominantly the budget and also the supply and demand data and metrics that you would look into. That's what's ultimately going to drive the demand. Is at the end of the day, is the area going to grow because of watchers or purchasers? purchases. That's right. So if you think about it that way as well, you can really delve into the value investing of real estate. So areas that are affordable, where people are moving in, there's demand that are coming in, and it is affordable because you can afford it as well, right? But most of the cases, and those areas tend to show a lot of growth, like market beating growth in those areas, and those are the areas that are beat.
Exactly. And there's fundamentals to this. It's like price is what you pay, value is what you get. I think there's a quote by Warren Buffett.
That's right, value investing.
But like, value investing, right? So you're buying undervalued assets at the end of the day, and that will come from understanding supply and demand. It's interesting though, there's that area I read an article recently about stamp duty concessions. Yeah. So that's in Perth. So in Perth, there's a stamp duty concession. So there's properties worth a certain value that you will be exempt from stamp duty. Yeah. So there's a few areas now. I posted on our Instagram recently. Yeah. There's like 7. Yeah. Obviously, if you're not there, what are you doing? Yeah. But there's like 7 areas where you don't need to pay stamp duty, depending on which property you buy and that price range. Now that's interesting to me because that I can't imagine that being in the same range for much longer. Like, your mind is going to fill that gap very quickly, I can imagine. Exactly. Because you're halving the cost of what it takes to get into a property. That's right. That makes it available for a much wider pool of people to get in. Yeah. So little things like that are what you can keep an eye on, and you're going to understand, like, what drives demand. Yeah, exactly right. And that's what you got to look for. Exactly. We got to spot that.
We've seen a similar thing when like government gives you a break on certain things. Yeah. Usually the private market actually catches up to that gap already. Yeah. So as soon as that concession is introduced, then it's a pretty good idea to actually make an entry into it straight away. So again, going back to the indecision idea, like, don't look at this and go, oh, what if just get into it. Just get into it. Yeah, exactly. And another thing is, we've seen that before in South Australia, where they've abolished the stamp duty on commercial properties in South Australia. And when that happened, that was to spruce up the sort of the activity in property investing in South Australia. And since that point on, South Australian commercial property investing has been just off the charts. Yeah. So people are going in crazy. And so when those kind of breaks come in, you have to make a decision to go, let's do it or let's not do it. Speaking of, and that obviously will have an impact on supply and demand, and speaking of supply and demand as well, it's not about, I've heard arguments of people say, oh, how do you know supply and demand isn't going to change in the future? I'll tell you, it will change, but it's not as fluctuating as something like on assets like crypto or the dollar or stocks or Apple. Here's the thing: the thing about people making a decision to be living in a certain area, that decision doesn't happen like snap. No, that happens over a long period of time. There are dreams, and it's
like psychology. Yeah,
it's in the making. So once you actually identify supply and demand data, you can see that actually gets fed in, and it remains quite consistent for at least a good part of 12 months. So in terms of the areas that you're looking at, supply and demand, and of course, looking at sort of these sort of government concession. Tax concession is going to be incredibly valuable for investors.
Yeah, exactly. Whoa, hold up, Landlord Society.
Are you sick and tired of the rat race and you want to start building wealth with property and generate passive income?
Then come and drop us a follow on Instagram and DM us the word Landlord.
The word what, Charlie?
The word Landlord, like the Landlord Society.
Okay, wait, Charles, what's our Instagram handle again?
At landlord.society.
You heard him, everybody. DM us the word Landlord to our Instagram to learn more about property investing. Now, back to the podcast.
Second trap. Trap number 2 is that paying off your mortgage faster. That's a bit of a controversial statement, I understand, but everyone is under the impression that paying off your mortgage faster is what will lead to wealth. Not everyone, but some. I think a vast majority of people would assume that's a wise financial decision. None of this is financial advice, obviously, but what we've seen, Handol, is that people that optimize for wealth tend not to optimize to pay down their mortgage faster with their own cash. Okay, it's not a wise use of cash unless you're in a specific situation where it is. And it depends on your current situation. However, like generally speaking, the best thing about property is that you can take out that debt and buy more property with it. Exactly. And leverage, right? And the thing that makes it amazing. That's where the opportunity lies. So there are some cases where paying off a mortgage faster, it's going to save you hundreds of thousands of dollars in interest. However, if you understand how to scale a portfolio, if you understand the difference in the nuances of how to grow and snowball a portfolio better with debt to develop a positive cash flow situation down the track, or in the immediate future, depending on what your strategy is, if you have like short-term rentals or dual occupancy or whatever it is you do, that's going to be a win-win. Okay, so I think people are they get very triggered, especially on the social media.
We took that whole bunch of them yesterday.
It's hilarious. Where do you need it though?
But what do we know? We've got no idea what we're doing.
It's all from love. We do love talking about these things though. That's what we're here to do, is to push through that.
Exactly. I mean, the biggest misnomer, I think, and this really makes me triggered, is people think that paying down the loan means they're building equity.
Exactly, and that's funny because
technically
they're right.
Technically, it is building equity, right? But why would you consider your money as building equity? It doesn't work that way. You know what I mean? You should the property should be building equity.
That's the whole point,
right? All you're doing by paying the loan down is just shifting the margin. That's all you're doing. It's not actually It's not actually building equity. You're not building equity paying the money down. You're building equity by improving the property, or the market is turning on you.
Exactly. That's where the money is best spent.
Exactly right. The valuation doesn't change because you paid it down. Think about that, guys. They're so stuck on this. Oh, I hate that, this and that, whatever. And another statement that I'll make is this. You say you got to get more debt in property. That would make some listeners sick to the core of their stomach, right? But I'll put it this way: if the property grows higher than what you owe to the debt, shouldn't you get unlimited amounts of debt to get the property? That's exactly. Exactly. So for those of you who don't think debt is a good thing, you haven't found a way to make property investment beat out the liability that comes from debt.
Exactly.
In which case, you're basically saying banks are stupid. Why would the banks, right? Think about it. Why would the banks lend out money at 6% to the dollar, right? 7% of whatever the market is right now, if they're lending to a cause that will not live up to that liability and then some?
If the banks come to do it, it's not over science. Maybe it's not such a bad idea.
Exactly. Or you are smarter than the banks. In which case, why are you listening to this podcast? You know what I mean? The misnomer around this topic is just. And I don't know where it comes from. And most of these people, it doesn't come from any solid education.
Well, it comes from generations of
just thought.
Of decision making that came before them. So buying the house and paying it off actually was good. That actually worked. That was pretty lucrative 2 generations ago, in the 70s and 80s. Because you could buy something so cheap relative to your income, which we go, that's a completely different story now. And you'd build wealth. You'd end up with a big asset there that's growing quite well. People would also argue, well, interest rates are really high. Well, interest rates seem high because they were 2% 3 years ago. But really, they're kind of where they should be.
Exactly.
Over a long time.
Not to mention, for the interest rate that we are dealing with right now, property prices have absolutely slapped the crap out of the interest rates anyway. The growth have been so strong, and the rental returns have just been fed straight to the tenants anyway.
And that's why property is a good asset.
Exactly, it's a fantastic asset.
It's all circular.
Exactly right. And Australia is not going to be dogging people out on interest rates when they know that as an economy, it's not going to be substantiated. Because Australia is just backed on property investors. It's not because property investors then bring in the income that they make, even if they don't pay a single dollar of a tax. Because of the money that they make, they're able to go and spend it, do projects, hire people to be able to then allow them to pay the taxes. I'm just simply making an observation. I'm not pushing an agenda here.
No, exactly.
I'm just making an observation. And exactly right. You have a choice now to be able to go, well, which side of the coin do I want to sit?
Exactly. That's the big thing. And people, a lot of Australians struggle with property prices, but the beautiful thing about property is that you can be creative with it. You don't have to spend, $750,000 to get into a property anymore. Well, you never really did, but there are properties that you can buy that are affordable.
Exactly.
And that can make you money if you're creative with a strategy.
Oh, absolutely.
And strategy is everything.
And like, I think there's another thing that I wanted to add, and that is, I mean, just that sound understanding around debt, I think, is incredibly important. And we say, pay down the mortgage to save interest about $100 or $150,000 in interest. We looked at some strategies where you can save like $150,000 interest on interest over a $600,000 loan over 30 years, right? But here's the thing: you're saving $150,000 over 30 years, right? If you invested in a property over 30 years, you'll make a lot more than $150K. You know what I mean? So all these strategies that people go into, trying to pay down this and that, trying to make a saving against the banks and whatever, great strategies to have, but probably once you build a portfolio. In your growth phase, you should be focusing more on accumulating as much as you can in the growth areas like we talked about, so that does the heavy lifting once the cash flows are set up, and then you can do that to then prepare for your retirement by paying it down after you have a portfolio, to be able to then establish a cash flow that will service your lifestyle.
Yeah, exactly.
That's right.
Another one is property management, managing your own property yourself. So that's an interesting one. Hey,
Yeah.
like, I feel like some people are very hands-on. You're hands-on. I'm pretty hands-on. But when you're managing your own property, you got to kind of scale it like in a scalable way.
Either.
So if you think that you can manage your property, you might be able to manage a few headaches and put out a few fires throughout the month. When something breaks, you got to chase around after it, find a tradesman, whatever. But for a 6, 7, 8% property management fee, you're getting someone else to just do it all for you, all of it. And then all you've got to do is just answer questions when they come to you with like the right, clear question that you can just answer. Makes your life better as an investor.
Absolutely.
A lifestyle choice. To me, it's an absolute no-brainer.
Yeah, exactly. I mean, it's just like debt again. Like, what are you leveraging and what are you getting out of it?
Yeah.
You know what I mean? And so like, if a property manager can go in, right, they'll charge you, let's say your rent is $500 a week. So they're going to be picking up $40 a week, in fees. That multiply that by to 52 weeks in a year.
$2,000 a year.
Yeah. That's $2,000 a year, right? But if they can, by being involved, build equity to the tune of 5 figures, right? Or be able to, return higher with their, and obviously you got to work with the right client. Working with a dud, property manager, even if they were charging free, I wouldn't work with them.
Yeah.
Does that make sense? So, where do you sit in that scale? Are you a good property manager or a dud property manager? You know what I mean?
As the owner.
As the owner,
you're
going to do what you're going to do. Yeah, exactly. Do what you're doing. So, would you pay yourself no money to do the crap job you're doing? You know what I mean? So that's a real question that you got to ask. And then you go, oh, okay, well then I've got to use a property manager. Now, property managers do a lot more than just twiddling their thumbs and just picking up checks. The good ones anyway. The bad ones will just twiddle their thumbs.
Yeah.
They monitor insurance, they monitor the condition of the property, look at potential value add opportunities.
Yeah.
They will, by saying this, I hope property managers who are listening would improve their service quality.
I know, right?
They will
look for new tenants when needed.
Look for new tenants when needed. Look for a renovation or value add opportunity. Do some project management. Have really hands-on and have really good network of tradies and people who can look after the property really, really well. Yeah. Be super quick, right? Responsive, very good on communication, everything written down. Those are the traits that you're looking for. Really good knowledge of the market, very aggressive and confident in driving the best value to you as a property investor. And you find that person, bro, pay them 12%. I don't care. They're worth every penny.
Because you make the money back.
Exactly right.
Yeah.
And that's the whole point of that leverage right there.
Yeah. Another trap, property types. So,
it's a big one.
Thinking that there's a property type that you need that's going to make problems go away.
Yeah.
So, big trap. There's like, what's one example of that?
People. I think there's a good knowledge out there that makes them go, I want a bit of land. Right. Another thing is this. They go, I want a big landed property.
I think house and land is a big one.
Yeah.
Is that what house and land?
Yeah, the house and land, but this is like landed property, like a second-hand, like old property with like big chunk of land, 600, 700 square meters of land. Again, where are you looking for these properties? If it prices you out, you're wasting your time. Completely wasting your time. So what you need to do is you need to be able to go, okay, what is the property type am I going for and where is it? That's a really important question. But let's circle it back to the different types. You got house and land, apartments, you got townhouses, you got already built homes, you got the house and land is before the fully built homes.
Yeah.
You got owner occupiers and investment properties as well. You got landed properties that are a bit further away. There's a whole lot of about that. It comes down to your strategy. I use this example all the time, right? Since it is, we go, hey, as a family, want to go on holiday. Right? You go off, and the dad of the house does a bit of research, shows to the missus, hey, look at this. What do you think about this location? Oh, they go, let's go, and they show them, like, let's go to China or something. She goes, oh yeah, well, they've got good food, be interesting. Oh yeah, well, what else is there? Okay. And the hubby goes and does another bit of research and go, oh, let's go to Bali. So, and they've got nice beaches, but it's quite cheap. We'll spend a little bit more. Oh yeah. What about we go to Europe? Oh, it's quite expensive. We're further away. And we'll take a bit of time to look around everywhere. Let's go for it. Oh yeah, okay. They choose somewhere else. Oh, what about the Caribbean? This and that. I have no idea what they're looking for. These are the typical types of people that scroll through realestate.com.au 2 hours a freaking day and they never buy anything.
Yeah.
Big waste of time. And these are the exact types of people that go, oh, property investing is so hard. Research takes 1,000,000 hours. I don't know what to get. And now it's paralysis. And you know what? All these people have 200K sitting in their bank account as well at the same time.
Yeah.
They're not like necessarily poor people. They're ready financially, ready to come make a decision. But then if you go as a family, you go, you know what? Our kids love splashing around the water and we like to drink pina coladas on the beach. Then guess what? You're not going to the Himalayas. You know where you're not going to? You're not going to Japan where there's Fiji mountains or whatever, Mount Everest. You're not going there. Or in the Scandinavia, you're going to places with a beach.
Yeah.
Right? Your Bali, your Caribbeans, all these Philippines, all these like places with good beaches, Gold Coast, whatever. Right? Places with beaches. Because you know your strategy, what you're trying to achieve, you know what you're looking for. Property is exactly the same. What are you trying to achieve? You're trying to achieve a lifestyle? Well, buy your dream home now.
Yeah. Do you want cash flow now?
You want cash flow now?
Do I want a renovation
property?
With a granny flat in the back?
Exactly.
Cash flow?
Yeah. Oh, I want a granny flat in the back, so I'm looking at apartments. What's the problem with you?
Yeah.
Right? But most importantly, then let's backpedal even more. What strategy are you going for? Right? Well, the strategy is then built around what you want to have life, right? You want certain things out of life. Okay, well, if that's what your desire is, your strategy has to supplicate the dollars for you to have that life. Yep. But the strategy that you got on doesn't spit out those same values. Well, guess what? You got the wrong strategy. And that's a really big fucking problem. So it's really important that you actually understand. It's really important to understand you have a right strategy and you actually enact on those strategies, and that will determine the types of property that you're going for. Unfortunately, we don't have the time in this podcast right now to go through every type of strategy and every type of the property type that would match these strategies. But as an investor, when you don't have a clear direction, and as an investor, when you are wasting countless hours on realestate.com.au, leading to absolutely no action whatsoever. So that's a big trap for people to be really honest with themselves and go, do I have a strategy that's based on my desires, right? Mm-hmm. And does it actually match types of properties that I'm looking for? Or am I just looking at pretty pictures here today?
Yeah.
Right? So got to be really real with yourself. So tune into our next episodes where we're going to discuss more of those things. Thanks for tuning in, guys. Make sure to subscribe and follow. Go drop us a follow on our Instagram as well. And we'll see you next time.
Cheers, guys.
Peace.